Hey guys, it's Chris back with another portfolio review update for the month of June 2021. It's been a while since my last one. Appreciate every single one of you that continue to watch my channel and stay loyal subscribers. So I have made some changes to my portfolio. We're going to go over the breakdown of my top 10 positions. I've been building up a couple of these positions with over $30,000 combined, so you're not going to want to miss this. Make sure to subscribe and like this video, and let's get started. Now, the first stock on this list should come at no surprise. It's the love of my life besides my fiance, and that's gonna be SE, all right? I have $38,000 in this position as of this recording. Okay, it is 16% of my portfolio, and this is a e-commerce, gaming, and fintech company. Now, I've talked about this so many times on the channel, but just to review a couple of things, especially after their really great earnings release. And by the way, I told people, shout out to the Discord that I'm in, link in the description. I told these people this was an unbelievable buy when it dropped on the earnings release to $204, and here today it's almost $260 again. So this is a company that is currently producing 100% revenue growth, which is unbelievable when you think about the past year that they had. E-commerce was booming everywhere, right? Gaming was booming everywhere. So many people were like, this is the best year that this company's ever gonna have, or this space in 2020, and 2021 is gonna be a big slowdown, and Cathie Wood stocks are going down. Everything is going down, and people are throwing it out because it's a growth stock. Well, guess what? At the end of the day, SE is growing like a wildfire, and there is nothing stopping it. It's more like a tidal wave or a tsunami, all right? The growth trends for e-commerce are phenomenal in Southeast Asia right now, and even in Latin America, where it is really starting to push itself and promote itself and expand, especially in Brazil and Mexico. And there are some talks that they're going to go into other countries as well very soon. Buy on 66 Shopee sale. Pop the sale with free shipping. Buy now and shop BBB. And for gaming, this company is still performing very, very well. Free Fire is still the #1 mobile game in various regions across the world. They get hundreds of millions of views. They have so many users, a lot of new paying users as well. As long as more people are paying and each person is paying up even more, that's a great thing for this company. And lastly, I'm very bullish on fintech. I have couple of other fintech stocks in my portfolio, but you look at the fintech side and you can see the exponential growth there, where payments transactional volume has crossed over 3 billion. That's going to only increase when you have more users using their app to do digital payments. They're going to get more revenue out of it, and eventually they might start offering more banking services as well. They just acquired some banks, and getting banking licenses, that's going to be very accretive to their bottom line. SE, I'm very bullish on long term. I think it's 1,000. This year, I think it's going to be in the 300s, maybe 400 if growth really does come back. Stock number 2 on this list is still JP Morgan. I have about $24,000 in this portfolio. JP Morgan and all the financial stocks, you think of Bank of America, Wells Fargo, Morgan Stanley, a lot of the other smaller regional banks as well, are pushing all-time highs. This group as a whole has been performing very well in 2021. 2020 was a garbage year for them. It was crap. But they have really come back because the economy is reopening. People are not defaulting on their loans so much. They have so much extra savings. You always hear, despite the pandemic, people's savings rate has actually increased. I really like JP Morgan. It offers a solid dividend, and we are expecting these financials to increase their share buybacks and their dividends. And when that happens, because they have so much excess cash where they don't really know what to do with it, they're going to be able to increase those dividends pretty substantially, in my opinion. And I would like to see it get back to around a 3% yield. That would be great, or perhaps even higher. Eventually, we might have rising interest rates, and rising interest rates are always good for banks because they have more leverage in what they can do with your deposits. Right? If you deposit money with the bank right now, the bank can only turn around and put that in some of them put it into funds to invest with. They have bonds, but those are yielding a very small amount right now. But if interest rates go back up, then they're going to be able to take your deposits, put it into some bonds or something that offer a better yield. Next stock on this list, now this is the new number 3 stock in my portfolio. This is one I've loved for a long time. Took me a while to realize just how much I loved it again, but it's FUTU stock, FUTU, okay? FUTU stock is incredible, and it's been on my stocks to buy videos. So FUTU just reported 350% revenue growth, right? 350, okay? 350%. Most companies can't even dream of putting up numbers like this. Unless they're back in a really small stage of their development, they're like private equity. They go from 1 million to 3.5 million or to 10 million. But this company is already very large. Its revenues are multiplying like nobody's business. And the only thing really stopping it, in my opinion, is the fact that people are skeptical about Chinese stocks in general and that these numbers are impossible. And yet no short seller has ever gone against FUTU. Let that sink in. That probably tells you something here that, this is probably legit and it's just being kept on the covers here. And people are just dismissing it, but I 100% believe it's legit. And by the way, quick shout out here, FUTU has a international app called Moomoo. It's so cute, but it's not just cute. If you go into the app itself, and they also have a desktop platform, it is highly legit. I highly recommend it. I actually have a link that you guys can sign up to join, and you can check it out yourselves. But it's incredible, the amount of resources fundamentally and technically. There's so much data out there, and it has a really neat community feature that I think is better than Webull. As much as I want those referrals too, I gotta say, in my honest opinion, not to just hype it up or anything, I think Moomoo app really is phenomenal. You can try it out, sign up for free. You don't even have to fund it if you don't want to, and it's a great resource to use. The next stock on this list is SOFI, all right? SOFI, otherwise known as SoFire, is one of my top fintech positions as well. You can clearly see I'm very bullish about this space because I think ultimately so many people are going to be able to do so many things on these super apps. And SoFi is pretty much the top one, where you have about 10-15 different financial products on there. Auto loans, student loans, refinancing, and they're going to have stocks and crypto and everything like that, all in one app. Very bullish about it, and it is currently 8.6% of my portfolio. Fifth stock on this list is going to be good old Facebook, all right? So the Zuck and Facebook have been doing exceptionally well compared to a lot of other big cap tech stocks. It currently is about 331 here as of this recording. It just breached its all-time high the other day. They're in all the right places because digital advertising is a really big thing. You see the ad spending for traditional versus digital, and digital is increasing double digits, and everyone's just moving their ad spending, whether it's social media, connected TV, or just good old Google search. People are moving their budgets there. That's where people's attention are. And not to mention, e-commerce on Facebook is going to continue to be a very big thing. You look at what they're doing with small business. You look at Instagram and the monetization, WhatsApp also, and the potential for charging seller tools. All right. Lastly, I want to make the note that Facebook, as always, has an extremely good balance sheet, about $65 billion in cash and cash equivalents, low 20s PE ratio. I think this could get to 400 by the end of the year. So it's 7.15% of my portfolio, and we're up about 25% on Facebook. That's the first half of the portfolio, by the way. If you are liking this video, make sure again to please like this video because it definitely helps. You might not think your like helps, but it helps. Okay. And I'm kind of a little hyper today, so hope you guys don't mind. And NVIDIA, all right. So I'm seeing NVIDIA right here as of this recording. It is $648 per share. That's a new all-time high. Reported some really good numbers the other day. 100% growth in a number of its different segments, like gaming. So it's doing very, very well. That's another one where everyone was like, oh my god, last year was so good. 2020, everyone's buying, stuff for their games, for their laptops, work from home, blah 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 blah, it's gonna be over. No, NVIDIA is here to stay, and it's still constantly growing. Their guidance was $1 billion higher than what was expected of them. All right, so people were expecting like 5.5 billion in revenue for the next quarter. They're like, no, 6.5. Right, so that's great. Not to mention, we got a 4-for-1 split coming up. 7% of my portfolio, that's my main semiconductor play. I think everyone needs a semiconductor type of stock here, artificial intelligence type of stock here. MP Materials is stock number 7 here, and this one, honestly, it's been disappointing because I was up on this position so much. I was at the high there, it was like $50 per share. Sometimes that happens. I do believe in it long term still, so not a problem. 500 shares here at $32 per share is my cost basis, about $14,000, and I'm currently down 13%. When I was up like 60%, 70%, but that's okay. Long term, and I do like it. It's a cyclical type of stock, but it's also a growth stock because the pricing for these rare earth elements is still going up. It's still much higher than what it was last year. So they're going to be able to sell at higher prices. And if they sell at higher prices, but also there's more volume because everyone's building EVs, then ultimately this is just going to be a really big profit engine. Stock number 8 here is going to be O Reliable, and that is O Stock, otherwise known as Realty Income Corporation. Okay, this is one of the largest landlords in the entire world. They actually also are merging with another company, I believe based in the UK, and that will put the market cap overall of around $50 billion. So definitely one of the biggest out there. They rent to a lot of big corporations, a lot of essential businesses like 7-Eleven, you have Walgreens, you have Home Depot, companies like that. And you also have a couple of them that are more of the reopening type of businesses like fitness centers and theaters. So those are going to come back, and they have been kind of slacking in terms of paying their rent to Realty Income. But for the most part, about 94% of Realty Income's portfolio of thousands and thousands of properties have been paying their rents, and their revenue growth and income growth over the past year remains to be about double-digit 10%. This is a consistent grower if you look at the track record over the past 5 years, and this is a monthly dividend stock. It pays about 24 cents per share that you have. So if you have 100 shares, you will get $24. In my case, I have 150 shares, $10,000 in this stock. I get about $35 a month. And it's nice to have some guaranteed income coming in, If you happen to be someone who's focused on income generation, especially if you are preparing for retirement, or that's just your thing, then this is something that you would definitely want to have in your portfolio. Now, one that does get me very excited is very similar to FUTU, and as I mentioned earlier, that is Tiger. That's one that I also featured on stocks to buy videos. So Tiger stock is it's been doing well. I have 400 shares in it at $17 cost basis, up about 35%, and 4% of my portfolio. It has been trading nicely. I like this pattern, very similar to FUTU. You see a double bottom, very nice, and it's trying to make its way back above this 23 level here. And then it's pretty much clear skies, in my opinion, to those, that $30 level there. Tiger also has extremely good growth, about 250% revenue growth over the past year. Their earnings are also multiplying like FUTU. It trades again very similarly at a low multiple. Nothing much more to say then. It's just another version of FUTU, if you will, but a much smaller company. FUTU is about 6 or 7 times larger than Tiger. But I don't like to put all my eggs in one basket, and I do see that both of these are performing very well. So I think both of these should continue to trend upwards for years to come. So I'm very excited with that. And with both of these different stocks, they are expanding in the United States, and in Singapore, and potentially other countries. And lastly, stock number 10 in my Robinhood portfolio is going to be Vale Stock, okay? VALE stock. This is a South American miner. primarily of iron ore, but they also have nickel, they have copper, and all of these things, again, follow the cyclical trade with infrastructure spending and everyone globally. Prices are going up like crazy with all the money out there. There is a lot of talk of inflation, certainly in these materials. Then Vale is going to be able to once again charge higher prices similar to MP. We love the profitability of this company, and when you look at their past earnings release, they did about $5.5 billion in net income and about $12 billion in revenue. That is a really amazing proportion. Once again, and when you think about last year, they only did $4 billion total, but they're doing $5.5 billion almost. Yes, right here, in net income in a single quarter. That has a lot to do, of course, with the fact that last year they did have to pay a lot of fines due to a mining accident, unfortunately, that they had a couple years ago. But they put that past that, and at the end of the day, this is a hugely profitable company trading at a very low PE ratio. PE ratio is about 10. It's gonna go to about 5 to 6 forward next year, so that's a really big discount compared to a lot of stocks on the market. And when you look at the price trajectory of iron ore and steel and all of these things, I think that it's only going to benefit even more for at least a couple more years. And not to mention that they had their production suppressed because of that accident, but now they're getting that production back on board. And that is going to allow them to sell more, and that is going to be more revenue and income. So I'm going to continue to hold this one. I have 400 shares here at a cost basis of $19.21. Also about 4% of my portfolio. So to sum up all the stocks in my Robinhood stock portfolio here, I have SE, JP Morgan, FUTU, IPOE, Facebook, NVDA, MP, O Stock, Tiger Stock, and Vale Stock. And from what you can see, I have a nice balance where I have some stocks in my portfolio that are pretty much pure growth. They're not making any profit yet. I have some growth stocks that do make a profit, like Facebook, like NVIDIA. And then you could say also the hyper growth ones like FUTU and Tiger that are still profitable. And then I also have just the pure cyclical or value stocks like JP Morgan, O Stock, and Vale Stock. So I feel that I have a really good balance in my top 10 here. I have a lot of other smaller holdings that I may talk about in a future video, but this is my top 10 in my Robinhood stock portfolio. Did have to take some money out of my portfolio over the past month to pay off my taxes, which was painful, but everyone has to pay taxes, you have to. And last year we had some really good gains. About $50,000 realized, so I had to pay up. But going forward, I will expect to see some pretty strong growth in my portfolio once again. But let me know in the comments down below what you guys think about these top 10 stocks in my portfolio, top 10 stocks to buy potentially in your portfolio, and let me know what are some stocks that you have that you want to share. Until next time, my friends, stay well and invest responsibly.